Ladies and gentlemen, good day and welcome to Tatva Chintan Pharma Chemical Limited Q1FY26 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Jain from ICICI Securities. Thank you, and over to you, sir.
Thanks, Shubham. Good afternoon, everyone. Thank you for joining on for Tatva Chintan Pharma Chem Limited Q1 FY26 results conference call. We have Tatva Chintan management on the call, represented by Mr. Chintan Shah, Managing Director, Mr. Ashok Bothra, Chief Financial Officer, Mr. Rajesh Pillai, Investor Relations. I would like to invite Mr. Dinesh Sodani, DGM Finance, to initiate with the opening remark, post which we will have a Q&A session. Over to you, Dinesh ji.
Thank you, Sanjay ji. Good evening, everyone. On behalf of the management, I am pleased to welcome all of you to Tatva Chintan's result conference call to discuss financial results for the quarter ended June 2025. Please note that a copy of all the earning call related disclosures is available on both the stock exchanges, that is NSE and BSE, as well as on the website also. Any statement made or discussed during this call which reflect our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risk that the company faces. A detailed disclaimer in this regard has been included in the investor presentation that has been shared on both the stock exchanges, that is NSE and BSE. Now, I will hand over the call to our Investor Relations Officer, Mr. Rajesh Pillai, for his opening remark. Over to you, Rajesh ji.
Thank you, Dinesh ji. Good evening, everyone. A warm welcome to all of you joining the Q1 Financial Year 26 earnings call of Tatva Chintan Pharma Chem Limited. The financial results for the quarter have been submitted to the stock exchanges and are also accessible on our website. Today, I'll take you through the key financial indicators and a brief overview of how each of our business segments performed during the quarter. For Q1 Financial Year 26, Tatva Chintan posted operating revenue of rupees 1,169 million, registering an 11% increase year-on-year and a healthy 8% growth over the previous quarter. EBITDA came in at rupees 173 million, reflecting a 37% year-on-year rise and a notable 94% growth as compared to previous quarter. Let me now share a quick snapshot of the segment-wise performance. Phase transfer catalysts contributed rupees 323 million in revenue. While this marks a 17% decline on quarterly basis, it represents a 9% growth compared to the same period last year. Electrolyte salts achieved revenue of rupees 12 million, showing a 32% rise over the previous quarter and a 12% dip year-on-year. Pharma and agro intermediates and specialty chemicals continued to perform well, delivering of rupees 432 million in revenue, up 32% sequentially and 11% year-on-year. Structured directing agents recorded a revenue of rupees 394 million with a 14% growth quarter-on-quarter and a 13% improvement year-on-year. With this brief overview, I now invite our Managing Director, Mr. Chintan Shah, to provide his thoughts on the strategic direction of the company and share his perspective on the business outlook going forward. Thank you. Over to you, sir.
Good evening, everyone. I extend a warm welcome to all of you joining our earnings call today. Let me take you through the key developments during this quarter. I am pleased to inform you that, as discussed during our previous call, the business sentiment has been gradually turning positive, which is reflecting in our Q1 results. We see further improvement in business sentiments in coming quarters. However, challenges and uncertainties continue to persist. The global geopolitical landscape remains fragile, and also there exist a lot of uncertainties pertaining to US reciprocal tariffs. As of today, most of the products which we sell into the US markets are not subject to reciprocal tariffs, but we continue to remain cautious owing to possible abrupt changes that can happen in the system. There is a sense of cautious optimism returning to the industry, and we are seeing a gradual recovery in export markets for our products as well. At Tatva Chintan, our core focus continues to be on strengthening our R&D capabilities. We strongly believe that scientific innovation is the most sustainable path to value creation and business growth. Our belief of innovation has started gaining recognition from our customers, and we are getting quite interesting developmental opportunities. As we move forward, particularly into the second half of the year, we are well prepared to unlock the outcomes of our focused efforts. Our strategic approach to business and unwavering commitment to our stakeholders remain as strong and resolute as ever. Let us now take a closer look at the segment-wise developments during the quarter. Excuse me. Phase transfer catalyst. This segment continues to deliver steady performance in line with our expectations. One customer onboarded last year is now getting into full-scale commercialization by the end of this current calendar year. Structured directing agents. The revival of demand in our SDA segment is now happening, and we shall continue to see increase in revenue over coming quarters. We are witnessing an increased demand supported by clear visibility from key customers. The growing customer uptake, coupled with the upcoming implementation of Euro 7 norms, positions this segment to grow over foreseeable future. We are electrolyte salts. We are seeing a steady and encouraging uptick from our customers using our electrolytes in energy storage devices. The second approved product is now being manufactured at plant level, and we are on track to dispatch the material within the current quarter. In a significant development, another customer engaged in manufacturing batteries for hybrid vehicles has also approved our material and placed their first small-scale commercial order for extended validations. This represents a critical milestone in our efforts to tap into the growing electric mobility and energy storage markets. The strong level of engagement and enthusiasm from our customers, coupled with our ability to meet the stringent technical and commercial requirements, underscores the long-term potential of this segment. As we continue to build credibility and scale in this space, we believe this business line will evolve into a meaningful contributor to the company's revenue and profitability over the coming years. Pharma and Agro and Specialty Chemical segment, PASC. The new large agro intermediate, which has been approved and for which we have received commercial order, is being continuously manufactured at our plant so as to execute the order in Q3. As we enhance our production volumes, we see certain teething issues which are being resolved and gradually moving towards smooth production cycles. The second agro intermediate has already received commercial approval now, and we have secured commercial orders for supplying starting in the second half of the year. Another high potential agro intermediate which caters to a significant domestic market is gaining strong traction among prospective customers. A major customer has already approved the product, and we are scheduled to dispatch samples to another large customer in the current quarter. The production of this product will require additional capex, which we plan to undertake at our upcoming greenfield facility in Jolwa. On the pharma intermediate front, we have successfully delivered plant-scale batches for validation of third pharma intermediate. For the fourth pharma intermediate, pilot-scale validation batches are in progress. Given the momentum and growing customer interest across both agro and pharma segments, we believe this vertical is poised to be a significant contributor to our revenues, not only for the current financial year, but also in the years ahead. Our strategic investments, customer-centric approach, and product pipeline are well aligned to capture long-term growth in these critical markets. Semiconductors. The years of dedicated development efforts to produce very high purity chemicals for semiconductors has now started showing its good results. This is now generating strong interest from leading companies within the industry. The biggest achievement within the quarter has been a successful supply of pilot scale samples meeting the customer requirements. Now we have been asked to deliver 2 repeat pilot run materials to demonstrate the consistency of our process. There is still a long way to commercialization of these products. It will pass through multiple scale-ups and validations over the coming years. We expect a slow commercialization to begin in 2027, leading to a full-scale commercialization in 2029. With the success of delivering this material, we have been awarded to work on a second opportunity. After many years of efforts in this segment, we could finally achieve the desired high purity product. This success has made us confident that this segment will bring massive growth potential in coming years. To conclude, we are encouraged by the momentum building across our key business segments, be it the revival in SDA, traction in energy storage materials, progress in agro and pharma intermediates, or the promising start of our latest innovation-driven segment. Each of these developments is a reflection of our strategic focus, robust R&D capabilities, and deep customer alignment. We thank our stakeholders, partners, and employees for their continued trust and support. With the groundwork laid in the previous quarters, we are confident of sustaining our growth trajectory and delivering consistent performance in the quarters ahead. With all the good things that have happened during the quarter, we do have a not so good news to share with you. Our CFO, Mr. Ashok Bothra, has decided to relocate himself and pursue another opportunity. It indeed has been a pleasure to work with him. We will surely miss him, and we wish him the very best for his future endeavors. Once again, thank you, and with this I hand over the proceedings to our CFO, Mr. Ashok Bothra.
Thank you, sir, and good evening to everyone present on our call today. The financial highlights for the quarter ended for the current quarter Q1FY26 versus Q1FY25 are as below. Revenue from operation of 1168 million versus 1055 million in Q1FY25. Other income of 11 million versus 12 million in Q1FY25. Other income mainly comprises of gain on forex fluctuation of 9.2 million, miscellaneous income of 1.8 million. EBITDA of 173 million versus 126 million in Q1FY25. EBITDA margin increased by 287 BPS year-on-year basis to 14.8% in Q1FY25 due to decrease in COGS by 4.1%, but partly offset by increase in other expenses by 1.2% YoY basis. PBT of 91 million versus 68 million in Q1FY25. PAT of 66 million versus 52 million in Q1FY25. PAT margins were at 5.7% versus 4.9% in the same period previous year. EPS stood at 2.84 versus 2.23 in the same period previous year. During Q1FY26, exports stood at 830 million, contributing 71% of the revenue. The major countries include Japan, USA, Germany, Malaysia, Switzerland, South Korea, and China. That concludes an update on the financial highlights of the company. I shall now request the moderator to open the floor for question and answer session.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudarshan Padmanabhan from Ask NDPMS. Please go ahead.
Yeah, thank you for taking my question. So my question is on the SDA side. The fourth quarter we did mention that, the worst, is largely behind as far as prices is concerned.
Sorry to interrupt, Sudarshan sir. Sir. There is a lot of disturbance from your line.
1 second. You able to hear me now?
Yes, sir.
There is a lot of background noise.
So my first question is on the SDA business. There is definitely an improvement on a Q-on-Q basis. But what I would like to understand is, last year we saw a lot of, price correction in terms of the, SDA. And the demand from China remained very muted. and incrementally EU and US were supposed to pick up. Now, if I'm looking at the first quarter, where there has been an improvement, probably on a year-on-year and even on a quarter-on-quarter basis, it has not been as stark as what one would have expected in this division. So, how do we see, one, the prices and the volume demand? Number two, how has, geographically Europe and US picked up for us?
Right. So to address the question, the first answer to the pricing part, pricing still remains to be at the same levels as last year. There is no significant change in chemical pricing on the raw material front, so the price of our SDA still continue to remain at the same levels. In terms of demand, still the Chinese demand is nearly negligible, whereas the US and the Europe demands have actually picked up. And it is gradually still picking up, and we see stronger demand coming in Q2 and Q3. That is the visibility which we already have. And we expect to execute one large customer contract to begin supplies from early 2026. So that will again have a significant impact in terms of volumes. Price is based on a formula. So as and when the RM prices would tend to change, we will have impact on the prices of the SDAs as well. And that is what is now anticipated, that prices have remained at non-viable levels so far, and just a matter of time until when they will sustain to continue at these low levels.
Yeah, sure, sir. And with respect to earlier, we were talking about 40 to 70% growth in volume. I mean, and also value if there is no change in the value. Would we be sticking on to that, or, would we be relooking at that?
We are sticking on to that.
Sure, sir.
Maybe a quarter plus or minus, but we are sticking on to that.
Sure, sir. That's definitely encouraging. Sir, on the PAC side, that is really, encouraging in this quarter. I mean, we are seeing good, traction. And there are multiple products that we have talked about. I mean, 4 commercial products and, several other products that can be rolled out. If you can give some color with respect to, how have we seen the existing product gathering momentum, and what can we expect as far as newer launches is concerned, and how probably from the current base we are expecting for the next few quarters and also in FY27?
Yeah, so as far as the existing products are concerned, there is a very marginal increase in terms of demand that is happening. With respect to the new launches, we have significant developments in terms of orders received for beginning from Q3, and we expect that to continue because the next financial, as per their customers' financial year, it will begin in early 2026. So we expect to regain that momentum going forward from January onwards as well. We also have one small production block coming up. We expect to commercialize production from there in January, and we hope so far we are on track in terms of timelines. So that will also give us a significant capacities to offer to the customers. In terms of product approvals and commercializations, we have 2 large products which are getting into commercialization. And both these products are now being consistently made at the plant to execute orders in Q3.
Sure. And we will stick on to the, guidance in this segment as well. I mean,
yes.
What you talked about.
Yes.
Sure, sir.
Yes.
And and currently, with the capacities, what would be the overall utilization, sir, across plants?
So until May, it was not fully occupied, but now I would say most of the capacities are occupied, and we have started becoming selective in terms of what we want to make and what we want to avoid.
Sure, sir. And one final question is on the margins. I mean, clearly we see that margins have improved primarily because of the mix and partly on operating leverage. And if I'm considering this base and, as we see the PAC will, gather momentum and SDA will gather momentum, I mean, should it be, right assumption to believe that Q on Q, we should consistently be seeing margin expansion, probably through this year? Would that be right?
Yes.
And are we sticking to the 20%? Yeah.
That is what we will see in coming quarters. Yeah. We stay with the forecast, and it is happening, and we have very clear visibility at least till December. So there is no favoring from our forecast that is going to happen so far.
Sure, sir. So thanks a lot, sir. I'll join back with you.
Thank you.
Thank you. The next question comes from the line of Varun Mohanraj from Scaniva Capital. Please go ahead.
Good evening and thank you for the opportunity. I think in the last quarter we had spoken about our entry into the semiconductor space. So I just wanted to, understand on a high level what are the applications we are planning to get into in the semiconductor space, and do we require any new facility for the same, or existing capacities would be fungible for it? Thank you.
In terms of capex requirement, our existing plant can only cater to a very small volume, so it could be a startup for the overall demand. And as I said during my address, it's going to be fully commercialized by 2029 is what is the deadline we expect. So though we will have some significant volumes beginning from 2027, so until then probably we can cater it from our existing facilities. But going forward, we'll definitely, to manage the kind of volumes that are being forecasted, we'll have to look at a new capex to happen. In terms of applications, we are presently looking at the area of etching and cleaning. So these are the two fundamental application areas where we are working with the customer right now. And now we have been provided a part. So this was one specific application area and a product with which we have been working since years. And now ultimately we have been successful in meeting the stringent requirements of specifications. And now based on our success, we have been given an opportunity to work on a second product.
Okay, sir. And
even within our existing facility, we will have to undergo a lot of modifications and changes to be able to. So right now, whatever infrastructure is in place is to only make this level of products at a pilot scale. We don't have the necessary infrastructure in place already to produce it on a plant scale. But that is what now we will have to start considering and build up a small modified area where we can handle this kind of high purity products. So that is what is under the cards. But first we want to execute the next two pilot run materials to demonstrate our consistency and product quality to the customer. And based on that, we will decide to go forward with minor capex that would be required to accommodate plant scale trials.
Sure, sir.
This involves
Thank you.
a lot of automations, lot of packaging automations. So a lot of systems are going to change within the plant to accommodate this, and we would decide the capex eventually as and when we feel it's the right time to go ahead with that.
Sure, sir. And my second question is regarding the electrolyte business. I just wanted to understand, based on the current facility that we have, what would be the peak revenue for the electrolyte business, and also the EBITDA margin at optimal utilization?
It's a tough question to answer because basically we are looking at a multi-purpose facility. So again, it would be a question when the volumes start picking up, which we expect that to happen now in very near future. So of course, a part of the electrolytes which goes into the energy storage system, we have sufficient capacities built up already. But as far as the electrolytes going into the supercapacitor batteries or the hybrid vehicle batteries, so this is the place where we'll have to look into some additional capex to happen in terms of certain specialized systems required to handle it in a closed system, in ultra dry and ultra pure mode. So if I assume correctly, maybe in the existing facility, we may hit a revenue close to about 100 CR from this. But ultimately, we'll have to look at further expansions at our new Jolua site.
And margin, sir?
So these are again as good in terms of margins as our SDA segment.
Okay. And finally, what is the capex plan for FY26, sir? Capex amount?
It's about 110 CR.
Okay. Is it maintenance or have we planned any?
No, we have a new block coming up. So that is to accommodate the missing parts which we require to achieve the full volumes that the customer wants for the new agro intermediates.
Okay.
This is within the same site, a new block within the same site.
Okay. Okay, sir. Okay, sir. That's it from my side.
Thank you.
Thank you. The next question comes from the line of Sanjay Jain. Please go ahead.
Yeah. Good afternoon, sir. I got a few of them. First, on the photochlorination side in the agrochemicals, where are we in the process and when is that commercialization expected?
Q3. We are now fully approved and the customer is already committed and placed orders for Q3. So they have certain open volumes available to give to us. So that is what now we are going to start producing from August.
Got it.
So we are through with that product. Basically now we are definitely into the commercialization mode, beginning supplies from November. So we have orders for November and December.
Okay. And on the pharma side, on the three products, where are we in the approval commercialization?
So third product we delivered. So first and second products are now accepted. So the validations are completed. So they are documenting those in the dossier. The third product we just delivered them from a plant scale validation batches. So that is, as far as we are concerned, we are through. So now it's in the customers, the ball is in their court. And fourth product is still in the pilot scale at our end.
Okay. And this dossier thing, how many months can it take?
Typically, we expect somewhere in August or September of 2026 when we expect to start commercializing these products.
26?
Yeah, next year.
So next year this time.
So
that's when the first
more. Yes, so they will also run few more validation trials. So there would be on and off demand, but not really significant. But the real commercialization is expected from August or September of 26.
Okay. This again is delayed, right? Because I think we were expecting this to start at the Jan.
I am at supplier stage 1. I supply this to supplier stage 2, and then they make something and supply it to the final API manufacturer. So the delay is actually happening at the stage 2 supplier, where they have some delays in their capex, so which is causing basically delays in the overall validation of the materials.
Got it. And on the SDA side, are we seeing the demand coming up for the Euro 7, or it is right now largely for the Euro 6 application only? And
right now it is largely for Euro 6, but we have started getting orders beginning from October for supplies for Euro 7 also. So that
October
is now
25
for Euro. Yeah. So we will have supplies beginning for Euro 7 product also. And
this
for
will
one
be
large customer, we are also validating another Euro 7 product. So we have just recently supplied some material to them for validation for Euro 7 application.
And when is this Europe expected to implement Euro 7?
Sorry?
When is the Europe expected to implement the Euro 7?
2027 beginning.
Oh, beginning 27. So we will be supplying in 25, 26 the material will be made, and 27 is when the final goods will go out.
Yeah.
Got it. And on the electronic chemical side, we were hopeful of a significant ramp up from the energy storage side of the business. How is that looking at? Because we are still tracking that 1 or 2 crore kind of a revenue run rate, despite commercialization by one of the customers.
I am just back day before yesterday after meeting with the customer in person. and they also showed me around through their plant and their challenges of what they are happening. So they have certain automated systems to make these energy storage batteries. And to feed these energy storage batteries, they need some secondary automated systems. So right now, these certain additional things is what still they continue to do on a manual basis, which right now is under process of getting automated, but this they expect by somewhere around September or October to have those 8 systems in place. So these 8 small automated systems will feed to the main automatic battery storage production line. So having said, without this automation currently, they are only able to feed 30% of the material. So then their automated line is right now operating only at 30% efficiency, because they cannot feed enough material to that automated line. So they are working towards it. And so we expect, so already their volumes are growing, but we expect significant rise happening from September.
Okay. Okay. So there is again a significant dependence for us on the second half of this year. I think first half is going to be at the same run rate as this, because most of the product we spoke are in the second half or CY26. So are we building a significant acceleration in the second half? And what is the confidence are we getting that this time around we will be able to execute it?
100% confidence, because we have orders on hand most of the things. So there is not if and but. At least till December, we have very clear visibility of what we are getting into.
Got it. Got it. So that's very clear, Chintan bhai, and thanks for answering all those questions, and best of luck for the coming quarters.
Thank you.
Thank you. The next question comes from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes.
Yes, sir.
So my question is with respect to the SDA, structured directing agent. So do we produce zeolites or do we produce the salts which help in the formation of zeolites?
Sorry, I didn't get you. What is?
Hello, can you hear me now?
I can hear you, but I didn't understand your question. You said zeolites?
Zeolites, yeah.
Zeolite. No. We make raw materials for the zeolites. Yeah.
Okay. We make the raw material for zeolite. So what is the total addressable market of this particular stuff, like SDA?
SDA has a lot of opportunity, a lot of different applications. We primarily cater to our largest segments come from applications into automotive gas emission purification. And second is into the petrochemical applications. So with these two, I would believe still we are at about 20% in terms of addressable market where we stand right now.
And my understanding is with the
but
current
there are a lot of other applications in terms of a huge application for right now they run something called converting methanol into olefins, converting so they call it an MTO. So these are much larger applications in terms of volumes, in terms of demand, very huge demand. But we are not addressing to that market because that is quite price sensitive, very low margin products and very huge volumes. So that is what we cannot probably handle from our existing infrastructure.
Okay, sir. So my follow-up question is, you in the previous call you mentioned that with the current block of SDA, we can do about 450 crores of revenue at peak utilization. So at 80% utilization, can we do, you gave a target of utilizing the capacity of 80% during FY26. So can we do about 300 to 350 crores of revenue this year?
Not this year, primarily because of the value erosion. So we are looking at roughly about 30% drop in values within last 1.5 years what has dropped. So you can eliminate that 30% value, and that is where we definitely are going to stand.
Okay, sir.
So in terms of volumes, what we have committed, we are absolutely sure to meet those volume commitments. Unfortunately, not the value commitments.
Why was there a value erosion? Was it on the customer's end, or was it because the value of the product in itself has declined?
Because the raw materials have become so cheap.
Okay. And so my second question is with respect to the high purity chemical which you are developing for semiconductor. So can I know the market size of this?
Difficult to put a number to that, but it is definitely very large. Definitely very large. But we are just doing a couple of products. So right now we are through with our first product, and now we are trying to address the second product once this first product moves out of the pilot facility.
So can you specify what are the products?
I would not like to give out the names. We are under some NDAs with the customer.
Not names, like type of product, like application or something like that.
So etching. Basically, these products are into etching categories. And we are looking at very large volumes of potential and number of, it's a big product portfolio. But first, honestly speaking, we have been working on this since last 6-7 years, probably a little more. And we never even, so it was a dream project for us whether we can hit this kind of quality levels or not. So this is the first time, that's why I said in my speech that the significant development and achievement for us is to deliver a sample which meets with the customer specification. This we have taken 7 or 8 years to deliver it in the right specification mode. So it is something which is significantly difficult to achieve, which ultimately we did. And now we can, with this knowledge, we want to do a little bit of more scale-ups. And once we are there, then we can start looking into other opportunities. So there is a big basket of products which you can cater into the semiconductor industry.
And sir, this etching category of products which you were planning to cater, sir, I just wanted to understand, is it like a specialized product that you need to
Yes.
that you need to cater for, that you have to make for different customer, or it can be supplied to mass customers?
There can be multiple customers for this product. For the same product, there could be multiple customers. Yeah.
Okay. And sir, my last question is with respect to the PASC segment. Sir, I just wanted to understand, you said that you have received one bulk order and that will be commenced in FY26, and you have 3 products under development, right?
Yeah.
So I just wanted to understand what are the nature, or what are the products, like the nature of products, or how, where are they used? And
so 2 products are agro intermediates, and the 3 products what we talked about are the pharma intermediates.
So 2 products agro intermediate, as in they, can you give any specification, or is it not possible?
One is the insecticide and a herbicide.
Okay, that is for the agro intermediate. And what about the pharma?
Pharma related to cancer treatment.
All the 3.
Anti-cancer, all the 3.
Okay, thank you, sir.
Thank you. The next question comes from the line of Siddhant Singh from Green Portfolio Private Limited. Please go ahead.
Hello, good afternoon, sir. I hope I am audible.
Yes.
Yeah. So the first question from my side is that the electrolyte segment, as you all know, it's a high growing segment. And I want to just get a guidance on what will be the percentage contribution of this segment to the top line by FY26-27.
I would say roughly about 10%.
10% of the whole top line, right?
Yes.
Okay, sir.
For
so
the next
question, by FY27-28, sir, I asked it.
You said 26-27, right?
Yeah, but you told for next financial year.
26, 27, 27, 28.
So current is 25-26, so I am talking about 26-27.
Yeah, it will be 10%.
Correct.
Perfect, sir. Sir, now then, as you all know, the balance sheet is quite healthy, and we are going to have a good set of cash flow numbers. Then what we can expect from the cash flow number? How much is going to be spent in R&D, and how much is going to be in CapEx also? Can you quantify these numbers?
The current year, we have CapEx plan of about 110 crores.
What about
And
R&D
then we
number?
are, so R&D, I'm
One
not
to
sure.
1.5 is the generally ballpark number which we spent on R&D as a percentage of revenue. So anywhere between 4 to 5 CR is the
Perfect, sir. Perfect. Then, sir, the last question from my side is that, as you have told in the last quarter, that the SDA price has been, the erosion in the SDA prices has been completely factorized. So can we consider that the price has been bottomed out and the only possible growth is there in front of us?
That is what I strongly believe. Yes.
Perfect, sir. Then what would be the overall growth in top line and in EBITDA levels for 27-28?
We are going 2 years forward. Hello?
Yes, sir. Yes, sir. 2 years. 27-28. Yes, sir.
I may answer that offline. Sir,
it will be forward-looking statement. So for 25-26, we have given a guidance of upward of 25%. So it will be very premature to give any guidance for 27-28.
Okay, sir. So one last question. You have told that the electrolyte salt segment would be growing at 200% something around, and if you calculate, then by the end of FY26, we would be having an revenue from that segment of around 20 plus CR. So are you still sticking with the number, or there is any change?
More or less, yes, anywhere between 15 to 20 CR.
15 to 20 CR.
Yeah.
Thank you, sir. Thank you. That's it from my side.
Thank you. The next question comes from the line of Darshil Jhaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. Hopefully, I'm audible.
Yes. Thank you.
Yeah.
You are clear.
Hi, sir. So I just wanted to, ask, like, right now, our FY26 guidance, I just wanted to clarify, it's 25% revenue growth and 20% margin. Did I hear that correctly, sir?
Yes.
Okay. But I just wanted to know, like, how our margin would behave, right? Because 20% right now in Q1 we did around 15%. So 20% would be majorly done in H2, would be relatively higher than 20% margin also, right? Our exit run rate would be very high then for FY26. So how do we see, sir, the next 2 quarters, or how do we see H1, H2? Could you just help us figure that out?
See, basically, if you see the numbers, there is a little shift happening towards 2 aspects you should look into it. One is little purposeful slowdown in terms of phase transfer catalyst sales, which means that we are producing enough, but we are consuming it more to satisfy our requirements in terms of SDA production. So for SDA, the raw material is the phase transfer catalyst. Okay. So if we have enough SDA production, we go for the value addition and we sell lesser phase transfer catalyst into the market. So that is what is visible from the current numbers. Secondly, there is also a marginal shift. I'm not sure exactly in terms of numbers, both of you, in terms of export versus domestic. 71% export, right? It was last quarter 61%. So from 61% going to 71% in terms of exports, that means we are selling lesser into the domestic market, which is more price competitive. What we sell majorly in the domestic market is the phase transfer catalyst, which is more price sensitive. So this shift has started to happen from mid of May. So the numbers start becoming more healthy. And this we will see going forward as well in the Q2, that the shift towards more of SDA and healthier sales happening from Q2 will have even better numbers in terms of EBITDA. And the margin realization will now surely reflect because plants are nearly getting fully occupied on the full quarter basis.
Oh, okay, sir. So on overall basis, like, so our product will have like margins higher than 20% also, right? Because right now they're getting dragged down because of other reasons. So like for next year, like how do we see, like, because all cylinders will be firing, plus we'll have maybe, pharma intermediary also. So any kind of guidance would you be able to give for next year, sir?
Probably another 20% to 25% growth is what we are looking at for the next financial year compared to where we end this year.
Okay. And the margin, sir?
About similar, 20% levels.
Okay. Around 20% level. Okay. Fair enough, sir. Yeah, that's it from my side, sir. All the best, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question comes from the line of Akshada Dev from Nivishay. Please go ahead.
Hi. So congratulations. Your margin improvement has been really commendable for this quarter. What I want to know is why are we still optimistic on the China rebound? The China demand may come and give us an upside, considering that usually in the last 2 cycles what happened with diesel was that EV was not a possibility. But now EV is even cheaper than LNG for them. And most of them considering subsidies and the 1 million kilometer mark. So can I just know why we are expecting that there may be a rebound here?
Primarily, what we are addressing as a market for our products is primarily the large diesel vehicles. So there still the EV is not that predominantly penetration of EV is still not happening. Secondly, if you see and talk to people across US, barring California, then the electrification of vehicles is not really happening and is not becoming really popular as they would have liked to. Again, with the kind of withdrawals of incentives by the new US government, the electrification process is expected to even slow down further. Similarly, if you look into another major industry car market is Germany, and there as well the push towards complete EV is kind of missing, and most of the players are now working towards going into the hybrid system. So your IC engine remains there in place, and this we are talking of passenger vehicles, okay? Where we have not a major part of our business application is not coming from this segment, but I'm just trying to give you an explanation of what is really happening. So because of this push towards more of hybrid systems, your IC engines for the car segment was expected to die probably 20 years down the line. Doesn't look like it is going to happen in such a near future. So the systems of IC engine continues to run, and it will be coupled with an hybrid system. And when you couple this with a hybrid system is where we have an alternate product which we supply for the hybrid batteries from our electrolyte segment. Now when we are talking of large diesel vehicles electrification, so still this is having hardly any penetration. The biggest challenge in the China market is not the electrification of the heavy diesel engines. The biggest challenge so far has been availability of cheap natural gas, which is kind of replacing the diesel engines with the gas engines. So now we are seeing since last couple of quarters the numbers which reflect is a gradual, very slow gradual shift from the gas engines to diesel engines. So still, as I said, the Chinese demand is still not visible much. But this is what now we are expecting, or the industry is expecting, the shift to happen within a couple of quarters, when we again see a rebound of diesel engines coming back in China. So this is how it looks like so far.
Okay. So sir, for Euro 6 and Euro 7 products, the Euro 7 that would start soon, so who are the other suppliers for this product?
Sorry, come again?
Euro 7,
The
what are
Euro
the
6 and Euro 7 category that we supply
We
for,
are
the
same
emissions.
competitors as we are same competitors as we are in Euro 6 supply.
Okay, same competitors.
Yeah.
Okay. So sir,
Hello?
As the participant has been disconnected, we will move to the next question. The next question comes from the line of Jay Vagasia, an individual investor. Please go ahead.
Yeah. So, Chintan bhai, continuing from the discussion of previous participant. So, even if the China demand doesn't come back online very soon, even in Euro 7, the 2027 you likely mentioned, but 2027 is for passenger vehicles, right? For heavy duty commercial vehicles, the Euro 7 norms are to be implemented from mid of 28.
But with the diesel vehicles, they are stringening the Euro 6 norms. So basically, the Euro 6 is going to a second level, which is sub of 2000 Euro 7, but it is somewhere in between Euro 6 and Euro 7.
Okay, got it.
So it's a diluted Euro 7 version.
Got it. And if I'm not mistaken, some quarters back you had mentioned that this our large agrochem product that we have commercialized, the catalyst for that is basically forward integration of SDAs. So can we expect SDA utilization to this, our own captive consumption of SDA to increase going forward, as from Q3 you'll be shipping more of this agrochem product?
No. These are not consumable catalysts what we made for this product. So this is kind of regenerative catalyst. So this probably should sustain for quite some time. The catalyst one build typically would require replacement after a year or a year and a half within the system. So otherwise it is continuously, otherwise it doesn't keep things. What makes it exciting is this development of kind of magic catalyst is what I would call, because without disposing them, without incurring, it's a one-time cost. It's kind of a capital cost that you have incurred and you keep using it for a year and a half. Same catalyst, regenerate and reuse.
Right. And lastly, Chintan bhai, for FY25, what has been our R&D cost?
I'm not very sure of, but must be close to about anywhere between 4 to 5 crores. I may not have the exact number.
12.8 crores, including capex.
Without capex. Including capex, it was about 13 crores.
4 to 5 crores.
But revenue expense, typically I am aware that it is anywhere between 4 to 5 crores.
Okay, right. So what I was thinking was, our R&D costs are not that high, but the products that are under development, being this for semiconductors, as well as the products that we have for electrolytes, these are niche products. So this kind of mismatch between the products I didn't understand. So R&D costs being low and our products being really niche. So can you throw some light on it?
Is it good or not good?
It's definitely good.
Why you want to push our cost high unnecessarily? No. Jokes apart. This is not an overnight development. See, it's probably we have been working on this since probably 7 years at least, maybe 8 years if I may not be wrong. So every learning comes with a cost. So we kept paying those costs. Every learning required some kind of new installation, new trials, new analytics. So everything kept on happening since last 7 years. So it's difficult to put a price to what is the real developmental cost of this particular product, but I'm sure it's going to be a very big number. Even if I look at the SDA, we started developing SDAs in 2010, and probably we actually commercially sold the first product in 2018.
Oh,
Right? So,
got it.
yeah.
Sure. That's it. That's it. Thank you and all that.
Yeah, thank you.
Thank you. Ladies and gentlemen, in the interest of the time, that was the last question. I would now like to hand the conference over to Mr. Ashok Bothra, CFO, for closing comments. Please go ahead, sir.
Thank you. On behalf of management of Tatva Chintan, thank you for joining us on our earnings calls today. We hope we have been able to address majority of your queries. You may reach out to Mr. Ajesh Pillai for any further queries that you may have, and they would connect with you offline. Thank you, Mr. Sanjay Jain, for hosting our call. Thank you, guys.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.